Okay, here we are again. A little bit of a disappointing week. I'm going to say it was a little bit disappointing. But only in the sense that we didn't get the full moon, massive breakout, you know. But if that's your measure, you're always going to be disappointed. But when we, last week, had done the back test of these important weekly levels, I really thought it was go time. And we had a good go. This is the weekly chart. You can see the move from the weekly close here to the high of this week was a pretty decent move. But then, in fact, we closed only marginally higher than last week. On the weekly, there's not too much damage been done. Sometimes, these areas, these key long-term areas, get back tested for quite a while. You can see 1, 2, 3, 4, 5 spikes down, big test, hangs around the level, and then it goes up in the way that you would have predicted anyway. But of course, the sooner the better, really, because sooner is always better. But no real damage done, so that's the weekly. There's nothing really I need to point out on the indicators here, so let's go down to the daily. This is silver, in case you're wondering. I've been charting silver, so I'm going to continue to chart silver. Now in the daily, you can see last week I put my green for go, and we got this move. And I was long on a trend line break for down here, and I moved my stops up a tiny bit, didn't take profits to the high, and then got stopped out. So that's life. I thought we would come back into this red zone. I was prepared for us to backtest this red zone. We've backtested the weekly and the big 50 fib. I thought, well, what's the next area we might do a backtest of to frustrate everybody? I thought it'd be this red zone. But then when we went so deep through it, it did stop me out. But I'm long again. The issue is I've got long again in this red zone here. So I'm actually slightly underwater at the moment, with the potential to become more deeply underwater if price decides it wants to keep on coming down, come down, do a test of 2600, or take out these wick lows here, which were the same areas, or this fib confluence and the weekly trend line confluence again. So it's potentially underwater going more underwater. Let's look at the 4 hour. The 4 hour does give us some reason for cheer, because the test of the low this week was in this purple box area. That's I've had this here for a little bit, I think, or I put it in earlier in the week if it wasn't there last week. We've taken out this wick, and this wick, and we've come into this sort of top bottom doji kind of area here in the purple box that was a pivot in the past. So this was a good place for it to stop and reverse, or at least pause. It could, this could be the could have a little rounding top type of thing here on the retesting from the underside of this red zone. Then we could come down here to 2600, which would also take these wicks out. Or again, the big weekly fib confluence trend line area here. But the cause for cheer, because I started saying there was some cause for cheer. We've got some good positive divergence on our 4 hour ease of movement and RSI of ease of movement. And in terms of how low the RSI of unbalanced volume came, it came right into where it was back here in this little like wave 1, wave 2 type thing that led to this move up. So that could become a sort of support, if you like, for the RSI of unbalanced volume. It might have been enough. If we're going down lower than the 4, well, I'll stay with this setup down to the hourly. We'll see if there's anything interesting on there, and then we'll switch up to our other indicators on the for a second view of the hourly and lower time frames, sub-hourly time frames. So just having a little look at these indicators, you can see there was a drop off in the RSI of unbalanced volume here. This sort of spike high thing that just went into this sort of space here. Got about halfway up into it, into that little void, and then we got the real big plummet move down. Now I'm long from like here and here and here, so I'm down overall. I think I have one position that the one that's down here somewhere might, you know, once the spread tightens up on the open, technically just be green, but it's not great entries. I think it was actually on the way down I was buying. So yeah, I had to keep moving my stops down, had my stops all the way down here, because I had some confidence in this purple box, but and again a little too heavy, a little too soon. I thought we might get another back test of this line. We got this back test of this line here. I thought maybe the second one might do it, and we've gone through and then back up. So really what we want to see now, at least on an hourly time frame, is for about here to hold. We want, what's that, 27.42? We want about 27.42 to hold. Failing that, we want 27.34 to 27.37. We don't really want to go back into the purple box, that wouldn't look good. We could always go lower, like I said, but we don't really want that. It doesn't matter what we want, you've got to remember that. But it's somewhat slightly constructive action. Let's take a look at it with our other indicators. We're on the 30, why not start on the 30? So the fact it sort of was cutting around and then cut through this indicates to me that might be sufficient. Just before the close we put in like a little low here, sort of bobbed up from it. So we'll see. Nothing spectacularly revealing on the 30 minute. That's what I meant, a little sort of bob down, bob up, just before close. So maybe we'll continue to go up. Maybe that will be a little short-term interim low, maybe we'll come down. Like I said, what was it, 27.40, 27.34. You can see on the 15 minute, the composite index of ours, I picked up the divergence in the purple box. I couldn't take any more positions down here though, because I've been on my phone at work. It's very inconvenient. I mean, I take so many losses. I should stop doing it. Trading on my phone at work, unless I've really sort of, you know, control myself and only get in small and at very strong pre-identified levels that I've, you know, I've known for days and have memorized. But when you're at work so much of the day, it's just like, you wait till you get home to take a position. That's like, you know, how much of the trading day is even left? What kind of action you're going to get? So, as long as it's at pre-identified levels, and I do try and control myself. Well, it's less of a problem now. I was saying I've lost so much money trading on my phone at work, but this is that's something that's basically stopped. I think my self-control must have improved, my self-discipline. So I can take positions without it being a disaster. In the past, I should say, that was something that lost me money. Again, impatience, over-leveraging, FOMO. But I think my psychology's improved since then. So maybe I'm being a little bit hard on myself. But it's not ideal, having to trade on your phone and work. You know, when you've got a spare minute and you think the boss isn't looking. So that's the 15. So open, high, low, close. We need to ramp up through this area here. Again, this red area here that was on the longer term time frames, it was sort of a floor here. And then, you know, we don't want it to become a roof. We want it to be, well, that was the test. You know, is it going to become a roof? No, we've got this little mini bottom here, and now we're just going to sail right through it. Because if this was going to be become a real rooftop, you know, we shouldn't have got this little bounce. Is my theory. So what I'm working on, that's my working model. We'll see. Let's go back up to the hourly. Yeah. So on the RSI, on the hourly, you can see a little long-winded, but there's a positive divergence, and we came right into this sort of green bull buying area. at 33. This should be at 40. This shouldn't be at 30. 28, it should be at 40. It should be 40 and 33. Is what it should be. And then these should be 66. Fuck's sake, it should be 60. 66. I think I'd had this set up for a 5-period RSI. Yeah, that's better. I thought those zones looked wrong. But even so, you see we came into this green bull zone here on the RSI. Between 40 and 33 is the setup I have. Again, these RSI zones, sort of the bullish zone in an uptrend, RSI will tend to dip into here. In a downtrend, RSI will tend to top in this area. Where did I get that from? Hayden. I think is it Andrew Hayden? Some guy called Hayden wrote a book on RSI. Really good. I think you can find it online still. It's still in print. I don't know if it's available as an ebook or a PDF or anything like that. But it contained all sorts of useful information about the RSI. I don't know if it's fully original or whether he's stole it from someone else. I know there's a guy called Andrew Cardwell, Dr. RSI. I don't know if it's fully original, but good stuff. Good stuff. So you can see we exceeded it here, indicating bearish strength, and then that proved to work out and to be true. But we've got the divergence. We're in the bull zone. What more can you say? We're looking for the positives. It's the purple zone. All about the purple zone. It's not there on the 4-hour. But we're right back into where RSI was back at the start of this move here. The composite index, either you can read this as a building positive divergence, or you can say, well, we're curling over and we're going to, this is a curling top on the composite index of RSI, curling around, and then we're going to go down. Open to interpretation. We'll have to wait for Monday, Tuesday to see how it pans out. And let's just look at the daily with this setup. Yeah, nothing especially revealing there. Right, let's look at some of the markets. Let's look at the euro, why not? Similar price action to silver. We've rallied from this low, we've put in sort of a... The channel is not as neat here. Like in silver, you've got that lovely daily channel. Here you're getting more sort of a wedge action going on. It's bounced kind of from one edge of the wedge to the other edge of the wedge. We just took... Ooh, not quite took the wick. Double bottom. We come further down. It would make sense to come into here, maybe like 12.098. Retest this sort of block here. You can imagine this being the block. Yep. So, what does that mean the dollar was doing? It was back above 90. This is the daily dollar index. That was the back test we were looking at last week. We've moved down. It wasn't great for silver though. And then we put in some little orange candles. This is what's causing the fuss, presumably, in silver. Just, again, because it's such an artificial construct, it's, maybe RSI would be better for this. Do I have another dollar index chart with RSI on? No, I don't. Alright, let's just put RSI on then. check our zones are in the right place. They are now. Potentially some building positive divergence. And again, you've got that wedging. This is being a downward wedge. In the euro, it was an upward wedge, so they're both wedging together, as you'd expect. Got a big move up in the dollar would really ruin everything, wouldn't it? But it can't be ruled out. It can't be ruled out by the looks of it. Let's have a look at the pound. I think the pound's been doing better against the dollar than the euro, at least in the short term. But look, we're back up at, you know, $1.40 for a pound. I remember way back when the pound was briefly $2 for a pound, and people going on holiday to America, and it was just ridiculous because they were getting 2 for 1 on their money, and everything's cheaper in America anyway. And you know, people were bragging about it, but they got all this stuff. They couldn't believe how little it costs. You know, hooray the pound, and then you know the pound collapsed back to close to parity. From sort of a fundamental point of view, I don't understand why a pound would be worth $1.50 or $1.4. What's so great about the pound? You know, Great Britain, is the economy that good? You know, why is it worth? Because 1.5, it's not nothing, is it? 1.5 times. That's quite a substantial premium over dollars. The Bank of England prints money. The Bank of England buys bonds, and you know, there's some industry left in this country, but most people are in service sector. It's shuffling the same bits of paper around. You know, they work for the government, they work for the local council. They're hairdressers or beauticians or plumbers, or you know, it keeps things turning around, but it's not bringing in. But you can tell I'm not into macro because I clearly have no idea what I'm talking about. But we're back up around 1.4. So, is there any reason why we would go back to those sort of recently historical highs of getting 2 for 1 on your dollars for your pounds? It seems like. I mean, why would we not just chop around now? Now we've gone up to 1.5, 1.4. Big 50% fib. Negative divergences on these indicators. Popping a bit of a trend line or something. Can we get a good fit? Let's just stick it on the close there. So that was the level. That's what caps it. That's what capped it. It was the duplication of this line. Capped, spiked, capped, 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 capped. Broke through. Yeah, I'm happy with that as a duplicate line because look at all the touches it's getting. So who knows? Let's look at the monthly. That's a good close. It's right on the 50. We've already tested this block here. So maybe actually from a monthly point of view, things are looking very good. That's an enormous positive reversal. Maybe the pound is about to go absolutely ballistic. Here we go. Look, there we go. Back in like the mid noughties. 2 for 1. 2 for 1 on your pound dollars. So bearing that in mind, let's go back down to the daily. It's getting a bit messy now. You can tell I've not cleared my lines on this. And again, look, there's a similar box like we had in silver. The only difference was silver actually came down and tested it. If the pound had moved like silver, the pound would have gone to 13,865. So, relative weakness in silver, I suppose. Yeah, so again, we've got this channel. Worst case scenario would be pound comes down, test the channel, And then if the monthly is going to be the tip of the hand, it should rock it, or maybe it'll just test here and then rock it, or it'll chop around and then rock it. But the monthly looks so good at the moment. At the moment, subject to change. Let's look at the FTSE, because I was lamenting last time that the FTSE finally done what I was expecting, gone 7,000 back when I was getting chopped to absolute death in the autumn of last year. Look at this ugly stuff it does to the indicators on the FTSE. I don't know why. It's 100 very widely traded, very liquid stocks, and why they would do this to the sort of volume-based indicators and make them look like such a disaster, I don't know. Anyway, if you believe the RSI of Visa movement, there's a positive divergence there on the daily. There was the level we tested, the big buying level. Remember last week? Where was the obvious buying level? Well, it was here. We're putting a high. A little divergence on the ease of movement. Negative divergence on the on-bounce volume. Let's look at the same view with just our momentum indicators. Yeah, you can see, again, it's all about these little voids. That's the void that it filled. It went into there. Composite index picked up the divergence. Marginally higher in RSI, but again, if we look, yep, 66.60, that bear zone in a downtrend. That's where we went into. So that gave you another clue that you might want to get out, you might want to sell. We came down, tested this orange, this is a quarterly fib, big fib. It's touched, it's cut through, it's touched, it's touched, it's touched. It's a floor, it's a roof, it's a roof, it's cut through. It's a roof, it's a pivot. And on and on and on. That's why it's worth having these long-term lines on your charts. There's more margin for error. You can't, but again, look at the precision. But you know that within a certain amount, they're probably going to be important, within a certain amount of volatility, because they're so important on that longer time frame, So, we're in this range. We're in a range. Let's say that's the real low. That's the real high. This was just fake to trick people. So that's the real low. Ignore this. That's the real high. Ignore that. And yes, I've got that right, because here, look at the 50. Look at the midpoint. Look at the midpoint. Look at the midpoint. Look at this. So when you're putting your fibs on ranges, you've got to try and find the real low, or what I call the real low and the real high. And that's not the price extremes. It's the levels that show themselves as being more important through how they move, cut through candles, how they cut through close on candles, how many times they're tested, and we've got a little distribution up here, but that was just to fuck people. That was the real top. That line. This was just the last bit of gas coming out of the rocket before it plummeted to Earth. This was the real up. This was the real down. This was just a little turnaround. Ignore it. This is the real top level, if you like. We see that here with 38.2, which captures that wonderfully. We see that this spike down here went down to the 61.8. We see this spike down here went to the 88.6. And of course there's lots of times it doesn't hit, but it's all a guide to action. And you go on your lower time frames, you look for further guides to action. So anyway, a bit like in silver, we went high, we went low. I know this is the 4 hour, ignore that, let's go down. Possibly sort of inverted head and shoulders, head, shoulder, shoulder, neckline. Possibly. Let's look at the 15 minute. Head, shoulder, shoulder. More clear. Neckline. Back test. It seems to me anyway. That's fairly plausible. But it's always a new week, so who knows what that close is meant to mean from the point of view of people who really move the market. Let's look at bonds. Still chopping around, but we did get a slight move up on the week eventually, but still within this whole thing here, that range. Nothing too impressive. Let's look at Bitcoin because it's funny. Look at the daily. Let's get rid of some of these lines, these old lines. Yeah, you can see where this acted as the top pivot area. We picked up the divergence on the composite index. If you put a trend line here, that'd be a beautiful trend line break. I had sort of lows projected from the low closes and also from the top of this last sort of block pivoty thing here, and that captured the retesting of this sort of space. It's the space. Sometimes you're finding spaces rather than finding zones where you go, aha, it's filled with price action from the past. You're looking for spaces. You can see that the space is here. This was the high and this was the low that defined this space, and they're going diagonally. Which is why the trend lines work. It's not a space just going horizontally, because if we look at the horizontal, look, it goes into it, and then maybe you get this here, but it's the diagonal that's important. The space is being filled diagonally again and again and again, and then it's moved through. So a pretty hilarious move on the week. So since the high in April, we have had a 54% down move to the ultimate low. Enormous discount. Enormous. And in such a short amount of time. We were talking about how crazy Bitcoin was though last week. I can't trade it, I'm on an ESMA broker. I can only imagine how ruined I would be by this point if I did. Well, a little bit of divergence. Maybe. And after such an extreme move to 30k, goodness, Bitcoin hasn't seen such low prices since January. Maybe that puts things in perspective a little bit, I don't know. But this sort of blue diagonal line is a duplicate line of previous trend angles of that have been placed above consolidations in the past. That's why it fits here. It fits beautifully here, but it's not taken from here. This is a duplicate line from a much longer term chart in the past. And you often find these consolidations, they become the rooftops, and you move one of these long-term diagonal lines on top of it, and then it fits perfectly. It's fractal. It's fractal from higher time frames. And we came right into it, spiked through, and now we're in this sort of big confluence resistance zone that includes everything from this all the way into here. All of that is sort of the immediate resistance zone. And then you've got, I would pick a horizontal level there. And then of course you've got a potential underside test in this diagonal area that was filled up here, and it formed an order block or whatever. So that's the daily. You'd really, if you were going to sell in any of those areas, you'd go down. You'd go down to lower time frames, because I mean you might as well just say that the whole thing is a zone, because we filled it with so many. But they're all areas we have to pay attention to. Ultimately is the important thing. There you can see the diagonal. So we could come up to the underside, we could come up into here and then go down. Maybe this is some sort of ultimate low. But crazy stuff. Crazy stuff. I can only imagine how many people have lost really horrible amounts of money this week. You know, I've only lost a few hundred, a few thousand. Usually after managing to make a few hundred or a few thousand. It's not so bad when you go back to square one, but the amount of money that some people could have lost. And the way people trade Bitcoin as well. I mean, when people are piling in on the way up, and it works, and it's genius, and you try the same thing again on one of these massive 50%, 54% discount, 54% down move, it's just not going to work. You're going to get raped. Anyway, we'll end it there.